Hello to all my Joe-dolls. I wanted to provide an update regarding the Federal Reserve's meeting yesterday. Now, if you're new to my channel, welcome, and be sure to subscribe and turn on the notification bell as I'm posting valuable new content on a weekly basis. Alright, so do you guys want the good news or the bad news first? Alright, so let's just start with the good news, which is that the Federal Reserve said yesterday on Wednesday it will hold its benchmark interest rates near zero through 2022. Did you guys hear me? 2022, that's freaking awesome, 2 years. Chairman Jerome Powell committed the central bank to using all of its tools to help the economy recover from the pandemic. He stated, and I quote, "We're not even thinking about raising rates. We are strongly committed to using our tools to do whatever we can for as long as it takes." So that's really good news, guys. Now, the reason behind the decision is that they want to help the economy recover from the virus crisis. Chief Financial Analyst Greg McBride states the Fed has cut interest rates as low as they're going to go without going into negative rates. He also states that the economic shock from the virus may cause for drastic measures, but negative interest rates are not one of them. Well, at least not yet. Now, you may be thinking, negative interest rates, what is that? I know, right? The name itself is very counterintuitive. So, Joe-dolls, with negative interest rates, cash deposited at a bank yields a fee rather than the opportunity to earn interest income. The idea is to incentivize loaning and spending rather than saving and hoarding. Also, in addition to slashing interest rates to near zero, the central bank also said it will continue to increase its bond holdings to preserve the flow of credit through our economy. Now, some not so good news is that in their economic projections for this year, Fed officials indicated that they expect the unemployment rate to end this year, 2020, at 9.3% and remain elevated for some time. It's projected that it'll come in at 5.5% in 2022. The board's analysts have also projected that the economy will shrink 6.5% this year, 2020. So that's not a good thing, as we're already seeing decline in our gross domestic product. However, they stated our economy is projected to grow by 5% in 2021 and grow another 3.5% in 2022. So what this tells me, Joe-dolls, is that this pandemic is going to have some lasting consequences, and it appears that at the minimum, it will be 1 to 2 years before we have a pre-pandemic recovery. Now, the very tragic reality right now is that we have over 40 million Americans that are out of work, and many people are strapped for cash, which is why I'm hoping lawmakers and the president move swiftly to pass another round of stimulus payment. The latest update on stimulus funding indicates that the earliest we could see an agreement is mid to late July. Now, if you're a person who is fortunate to be stable financially at the moment and you have fair to good credit, I would recommend looking into refinancing any student loans, personal loans, car loans, especially if you're paying double-digit interest rates or more with a good credit score. Take advantage of these rates while we have them. Now, the rates set by the Federal Reserve Board influences the rates we get from banks such as Chase, Bank of America, Wells Fargo, etc., because the Federal Reserve is the bank for the banks. Now, historically, low borrowing rates means that loans are cheaper if you can qualify and get them. So while it is true that rates are cheap right now, the downside is that the banks have also tightened up their lending due to the unemployment rate and economic uncertainty right now. Due to all the chaos right now, we have seen some people have their accounts closed, frozen, or credit lines cut. So there you have it, Joe-dolls, the most recent economic update from the Federal Reserve Board. So what are your thoughts? Do you agree that we're gonna have high unemployment and that it may take 2 years for us to have a full recovery? Leave your feedback in the comment section. Also, if you found value in the video, please give it a like, share it on social media, and subscribe to the channel for more content updates. Thanks for watching, and until next time.